The price of gold has been in the news a lot lately as it has reached all-time highs in dollar value. And it's quite something to see gold make this run up in price in spite of interest rates being high. I think U.S. debt is hitting certainly recent highs in the amount of interest paid on it. So why is this happening to gold, and what does it mean? If we look at retail markets, actually, this isn't so much retail buyers who are driving up the price. Interestingly, this increase in price has driven away a lot of retail buyers. The price of gold in India is also at all-time highs, and demand for gold in India has collapsed. I read an article saying that Indian gold imports have declined by 90%. And if you look at websites of companies selling gold and silver coins and bars, the markup over spot price is very, very slim. So there's not a massive increase in retail demand for gold, buying coins or rounds or jewelry. The demand seems to be coming from central banks around the world buying up gold. And I listened to an interesting commentary about how as countries decrease their dollar holdings year after year after year, the currency they are turning to more than other currencies is gold. So central banks continue to accumulate. They have a schedule of how much they need to buy. They continue to buy. The price goes up, they buy. The price goes down, they buy. And that has been driving the price of gold higher and higher and higher. Should the U.S. Federal Reserve cut interest rates, that could spark a quicker spike in the price of gold. But prices are funny, Sometimes the rumor is what drives the prices up. And when the fact comes about, when those interest rates do get cut, perhaps investors have already made their positions ahead of time, and the actual act of cutting interest rates may even see a drop in the price of gold once that becomes a new reality. So prices are funny. The things that drive prices can be hard to predict. People who can predict prices with any accuracy are few and far between, and they're never always right. Now, there's a very interesting phenomenon going on here where gold is, yes, at all-time dollar prices. And that applies to pretty much every major currency that I've looked into. Gold is at all-time highs in pretty much every major currency, except for one, that is the Mexican peso. The Mexican peso has also been experiencing a very fast and significant rise in its value, to the point that gold is not only not at all-time highs in the Mexican peso, it is down for the year in the Mexican peso. If you had spent Mexican pesos to buy an ounce of gold a year ago, you would not have broken even yet on your investment. You would have been better off holding those Mexican pesos and buying gold now, even after this massive run-up in price, than to have bought that ounce of gold a year ago. So these things are all relative. A record high in one currency may not be a record high in another currency. And the story of the Mexican peso is very interesting in itself and certainly worth reading into. Another very interesting phenomenon with the price of gold, priced in dollars even, it is not at an all-time high if you compare it to the purchasing power of the dollar. Back in the early 80s, I think gold hit a high somewhere in the $800s of dollars per ounce. That money today would be several thousands of dollars. That would be, like $3,000 or $4,000 today. So gold was actually much more expensive at that point, at that previous high in the early 1980s, than it is today when you compare the strength of the dollar and what a dollar could buy. So a lot of interesting stuff going on here. Yes, the price of gold is at all-time highs in dollars and euros and many other major currencies. In a major currency like the Mexican peso, it is not at an all-time high. And when you compare the purchasing power of the currencies that gold is priced in, it is nowhere near an all-time high, even today with this recent dramatic increase. So let me know what you think in the comment section below, and I look forward to talking to you again later. Bye for now.